Hey guys, this is Rod here for Day Break Investors. So let's look what happened this week and what we can expect for the next weeks from now on, right? So this is the SPY, the S&P 500 main traded ETF. And this week, on the last 2 days of this week, after a very parabolic move up from October 3rd until October 11th, the price followed this parabolic uptrend until it was broken on October 12th. So this was a very, very temporary uptrend that took a few days, but was quickly broken. So we had some bad news, right, about CPI data. It caused some fear on the market, and the price went down here on this candle on the October 11, and tried to go under, try to break our support here on the 430s, and it failed. It went back up. So the next day on Friday, it tried again. It opened 435, went until 430, 430, kind of here, and went back up again, finding again support on our 430 time zone. So one can argue, are we really back to the downtrend? It's hard to make this argument right now because let's look at the other indices. So triple Q. So triple Q also did the same thing. So on October 11th, it kind of tried to break the support that we had on the region of 470s, but went back up. But on Friday, it tried to go back down again. It finally broke support, but it found a new support zone here on the 365. So the price closed right here on the support zone on the 365 for the triple Qs, which represents again the Nasdaq. Okay. On the VIX, what we got on the VIX? So the VIX tried to test again this 420s region, and it keeps finding resistance on the 420. So if you look at when this thing started, the 420 region, so it's been going on for a while now. So since May 4th of 2023, the VIX was never able to cross back up this $20 region, right? So one can argue that even though there is some fear of recession, the recession momentum is actually, the recession talk, I should say, is gaining momentum right now. It's not really being able to cross above 20, all right? So what happened during the recession 2022? The VIX was much higher, was on the 28 region. So this is real fear, right? And if it go even, if you go back even more days, so during September 28, 2022, the VIX was really high, right? But if we consider going back several weeks, and I'm gonna reset this graph real quick. So this was during COVID. So this was extreme fear, 77, and went all the way to 85. So this was really, really fear on the market. So it came back down, right? And if we go back to the daily time frame, so this is an important measure of a possible either a recession in the future or not, because the VIX open here, so there is no week on Friday. So the VIX open, it had no doubt, it went up. The price went up, but when it hit the resistance here, it came back down again. So one can argue, is a recession back? Okay, so the next is Dow Jones Industrial Average. Okay, the Dow Jones Industrial is still on this short-term uptrend here. Okay, So Dow Jones have a bigger downtrend. So you can draw this downtrend like that, just using the extreme price moves. And I'm not going to lie to you. When the Dow prices reach here, this is going to be an important measure of resistance, and this is going to cause some issues. The bulls are going to really have to push. But coming back again to Friday, so the Dow had this this move on the price, but there was some doubt where the Dow was going, because the Dow really closed way up on the lowest price and way down on the higher price. So there is some doubt here on the Dow Jones. If you go back to IWM, so the IWM really faced some challenge. Not only it tries to go back, the price really, the candles really went down here on price, but it tested an important level on Friday, right? So the IWM, and I should put this short term, I have to fix now this short term uptrend. So one can argue, did we really break a trend here? Okay, because before that the trend was kind of like that, right? It started here, so on the extremely low, explore this low here. So let's move up. It may have broken, but not by much. And the IWM, the small caps are still finding support on the 170 dollar price zone. So if we go back here, if we move this time frame to 1 hour, what you're going to see is that the IWM was really fighting, is been really fighting to keep this range, to keep above this time zone. And even with the bears really pushing the volume, really bearish volume, the IWM is not yet breaking the 170 price zone, I should say that. So when we come to the futures, what are we looking here? The futures are all green today. So futures start trading back on Sunday, not on Monday, just a reminder. So the futures are green today, and this is not something that the bulls like to see. The bulls are not happy about the oil futures going back up again. So there may be a lot of explanations why the oil futures are going back up again. So you see, there was like a bullish trend channel coming from January 28th, 2023, all the way to, let's see again, the 28th of September, September 28th, and then this trend was broken, right? So we started a real downtrend here, a ballistic downtrend. So it looks like the price really, you see, there is a saying that the bulls take the stairs and the bears just jump off the window. So this is what really happened here. So the bears jump off the window here. The price had a parabolic move again down. It went down a big previous support, and then it found its way back up again. Okay, here on the October 9, it kind of closed again on the previous bullish uptrend. It went back down. It closed again under the support, and now on the last 2 days of the last week, it had this gigantic parabolic move. So it was able, so the oil prices were able to break a previous resistance, but they were not the previous resistance, I should say, on the $86 zone, right? But it couldn't break another resistance on the $88 zone. And when the oil prices, the oil futures open again today. So what we're seeing so far, if you should go back to, let's say, the 15-minute time frame, you're going to see that the oil futures are really trying to fight to go up on this trend. And one can argue using technical analysis that this is a multiple top, right? So the oil futures are trying to keep fighting this price. So what does the pattern say about multiple top? That eventually, when you have a multiple top on the prices, I didn't do this thing right. Let's go back. When you have a multiple top on the prices, oh gosh, okay. Let's do it like that. When you have multiple top on the prices, right? The prices may actually go down. But a pattern is just confirmed is just confirmed and validated by volume confirmation. And so far, there's no much volume to confirm pretty much anything. So going back to the hour, again, there's no really much volume. Actually, the volume, like at least during the sun, it's not really uncommon for futures to trade above the moving average for volume. So it really is not saying a lot. We have to wait until tomorrow and then what's gonna happen the next few days. But the crisis on Israel and all the Mid-East crisis now may be contributing for this change on the pattern for the oil futures. So guys, when we actually, let's go back to SPY real quick. And let's see what happened on SPY on the last few hours of the day on the daily time frame. So if you want to argue that we are back in a recession, on the last hours, okay, so you can look at that as a new trend, or you can just analyze the volume. On the last hours, even though the bears really tries to push the prices down, the size of the candle was not really big price on the candle. But then again, it came the bulls, and really tried to push the price. So you may argue this candle is not really big, but this is an important candle formation here. So it ended Friday with a hammer. So hammer candles, and everything have to be confirmed on the next open and closing of the candle, but they are considered bullish, and there is a lot of statistical confirmation that confirms that the hammer candles, they are very bullish, and the higher time frame they are, the more bullish they react and more confirmation they have. Okay, when it comes to trading, so we're gonna go back again. So let me take this thing away. Okay, I'm gonna take this brush away right now. Guys, folks, when we're trading, we have to always look at the higher time frames, because there is no serious trader can consider themselves serious if they are not looking at the higher time frame to see what is the real trend on the market. So no serious trader is gonna buy something, and I'm gonna put on the weekly time frame. Okay, no serious trader is gonna buy anything if the main trend is bearish. So we had a main bearish trend here, okay, during this period of time until the trend was actually broken, okay? So this was a clear downtrend. So many traders got bull signs, buy signs, but they were trading during this time period against the trend. So remember, try always trade with the trend. Okay, so the higher time frame had a clear downtrend. So same thing happening here, right? So during this time period, on the week starting of October 10, 2022, 1 year ago, okay, we can do this uptrend on different ways, okay? So here we are doing an uptrend line using the extreme lowest prices that we can find on this uptrend, okay? So this is a fair uptrend. Many people got signs or got on their analysis the sell decision, short the market. So many people lost a lot of money and they were bear squeezed because they were trading here on an uptrend because this was a clear uptrend, right? Many people draw this uptrend like this. You know, it's for the analyst is on the eyes of the analyst how you're gonna trade this uptrend, and it's all fair game. Okay, so even people when people were considering trading this uptrend, let's say until the week of September 11th, okay, the main trend was uptrend until this trend was broken here. So let's go back to our trend here, a more conservative trend where we are doing the trend line using the extreme lowest prices of the periods. We are analyzing this trend. Folks, since October is a bearish moment, I'm sorry, September is a bearish moment, is a bearish month, and it's been for years and it goes decades like that. And there is data to support this. So the end of Q3 on the month of September has been for decades a bearish month. Okay, it doesn't matter how good or bad the market is, but there is a historical baseline here. There's this historical data on the market that confirms that September is bad. So, and the same thing applies to October. October may still follow what happened on September a little bit and maybe take some time to catch up, but October is the beginning of Q4, and usually the data support a bullish sentiment on the market. And if we look at the market here during the weeks starting on October 2nd, you know, this is a hammer candle, okay? And on the week of October 9, even though there were many bad news on the market, CPI data, the war on Israel, Mid East crisis, and everything is still close green. Okay, one can, oh, but this can be a hangman. True, but not exactly right. We still have a green candle here. So the bears and the bulls can make all the arguments they want, you know. Frankly, I have to this moment a bullish sentiment because of data. But I'm going to confess something, you know, the downtrend is where many traders can make a lot more money during the uptrend. So again, so bears can argue that the market have been on a downtrend. So we can make actually this downtrend here. And this is all fair game. Okay. Maybe can we do like that? So we can get more touches on this downtrend. Yeah, we can do like that, or we can do like that. But then again, on the eyes of many analysts, we are going to have some problems here on when the price reach 447, because this is going to be a very, very respectful resistance. And this resistance is going on for a while. Okay. So the uptrend is happening, or should I say the downtrend is happening longer than the uptrend. And I guess I get this many times. It's all fair game. It all depends on the height, on the eyes of the beholder, on the eye of the beholder, I should say. But let's take this away from here real quick. There's some schools of thought, okay, that they look at a chart using the weekly time frame, and they look at this chart for a long time. Okay. And if you ask for example, a 5-year-old to look at this chart and ask them, hey, do you think the price of this, I don't know, Pokemon cards here, are they going up or down? Or they're going to answer you. Another thing is that there is a tool that was widely used that's named Fibonacci. So Fibonacci is an Italian philosopher that created the concept of the golden ratio. So for who knows about Fibonacci, I'm not going to explain Fibonacci right now, but I'm going to talk about Fibonacci when it comes to the stock market. So if you start, Fibonacci really starts on the lowest price of the stock market, and we are reaching the lowest to the highest price right now, okay? So the lowest price, the lowest, more extreme price happened on the week of, this was during the COVID time of March 23rd, 2020. And the highest price happened on the week of the January 3rd of 2020. And what does it try to accomplish? It tries to draw and give you a definition of good and reliable zones of support and resistance. And when it comes to Fibonacci, the most important zone is the golden zone here. So this is the golden zone of 0.618. So there is a whole concept about this golden zone here on Fibonacci. And when it comes to the zone, listen, you can actually interpret that it never crossed under the golden zone. The price, no candles during this time period since COVID got crossed under 0.618 zone, okay, which is the golden zone. So this is a very, very important zone. And people say, hey, Rod, so people can draw this thing from different ways. And that is true. That is true. Some people draw the Fibonacci first from the highest to the lowest level. Okay. So if you draw like that, if you draw like that, okay, you're gonna see now the that the lowest candle touched the 0.5 zone, and I should say this is probably the second most important zone. And the golden ratio is the first most important zone. And when the price touch the golden zone, it kind of dance around it, right? So it dance around. This means that Fibonacci was right on this point, and one can argue, but how come is this? Could be this could be maybe a self-fulfilling prophecy because Fibonacci is widely used around the world of finance and technical analysis, and the price really dance around. And many times, Fibonacci serve and show an important support price here, support zone for SPY. And another very important thing, another measure of downtrend and uptrend is a concept of the 200 simple moving average. Many analysts around the world consider, maybe almost all analysts in the world consider that 200 moving average slope to be a measure of up and down trend. So for example, right, if we go back to COVID, this was a real badass downtrend. Okay, during the week of March 9 until the week of March 30th, the market really closed under the 200 moving average. Actually, I should say between the March 16 and the March 30, the weeks of March, from March 16 to March 30th, the price closed under the moving average. So this was a clear definition, acceptable definition of a recession, right? If you go back in time again, going back in time, it was dancing here in 2011, election year, okay? And the real apocalypse, the real downtrend on the market, when the market was in, many people are going to say the real recession. I kind of have my own thoughts on that, but I'm not a financial advisor. So I'm going to give you what many people think about the 200 simple moving average. We are on the weekly time frame, so this is the 200-week moving average. So this was a downtrend. This was a recession. And this is a recession that lasts a long time. So the recession kind of, well, one can argue a lot, but it really comes down to the reality of the price points really repeating a pattern of closing under the 200-week moving average. So between the June 23rd, 2008 until this time, maybe this time here when the prices are happen to close consistently above the 200-week moving average. So during this period from 2008 until November 29, 2010, so this was a clear recession period for many analysts. Fair game? So let's go back now to the present. Enough history now. What happened with this recession of ours, okay, in 2022, starting in 2022, okay? Prices had a parabolic jump off the wind, right? This was a parabolic parabolic momentum, parabolic downtrend. It doesn't matter the way you say this, the way you actually create those trends, and the way one can create these trends can vary with time. Trends are not fixed in time. You know, it doesn't matter what one can say. There's just one, let's say 2 weeks here, okay? The prices closed under the 200-week moving average, which were the week of September 26th, but not really, right? Because the price on the moving average was 358, and the price, it's really hard to see this. So let's go back again. The price of the moving average was around 358 again, and the price closed at 357, okay? The next week, it closed above the 200-week moving average. And then what happened on the following week? The price looks like was really capitulating here, and really went down until the price found what? A support on the 0.5 Fibonacci here, on the Fibonacci point of 349. It found support here. There was also a previous support zone, but let's talk about Fibonacci. But it closed, it's still under the moving average. You see, there was a big rejection here on the price, and the price closed under the moving average here. And so the price was here at 359 during that week of the 200-week moving average, and closed just shy under 358, okay? But then here on the next week, the price found, the price closed above the support, this dynamic support of the 200-week moving average, and never look back again. So with all this data that I'm just showing you now, and all this action going on the chart, I kind of still keep my, but I'm going to be flexible. I'm still bullish, okay? I know there are signs of fear. If you go back to the fear and greed index, okay? And I'm sorry, I didn't put that before. The fear and greed index is now at 29. A few days ago was 49, okay? So the fear is starting to lower a little bit, even with all these questions about interest rate hikes. The Middle Eastern crisis, the war in Israel, and everything that's going on. But on the economic calendar, and that is actually the other extreme here on the situation, okay? We are gonna have a lot of events between the weeks, between the next 2 weeks, right? We're gonna have a lot of things that will make the market really volatile, make us fear. We're gonna have the PMI, new home sale, the PCE price index. But then again, on the week starting October 30th, we're gonna have the Fed interest rate decision. And that, I think, is gonna be the main driver, or maybe I should say the main concern, the main measure of next direction for the market. So if you go back to the S&P 500 and put the Bollinger Bands back, you're going to see on the daily time frame that, I'm going to reset this chart again, the bands are squeezing. So it probably means that the prices are going to be trading on some tight range for the next few days. For the option investors right there are going to look into this and going to say, okay, can be a good opportunity for an iron condor. And you're not going to be wrong. It's really a nice opportunity for an iron condor. But be mindful of the economic calendar. This is going to move the market, and it's going to move the market a lot. Guys, I know this video today was super long, and I apologize for that. but I just thought it was interesting and good information to provide you, to show where I'm coming from. And I'm trying to show different things and different arguments about being either bearish or bullish on this market. And I don't want to disrespect anyone, because there is a lot of data that confirms the sentiment, and the fear and greed index is one of them. Someday I may do a video on the fear and greed index, but keep in mind that, again, at least on the short term, the VIX is not being able to cross the 20s, and the real downtrend on the market happened at least on the on this range of 23, beginning from 23 to 25 and going higher. So this is the real downtrend on the market. That's what happened when the VIX is high. It increased fear, increased volatility, and we are not there yet. So going back to the S&P 500 again, fasten your seatbelt. This is going to be a ride. Guys, thank you so much for watching. Happy trades, and be safe out there.